So guys, the next content I'll be bringing your way is going to be based on indicators, guys. Based on demand, I'm going to make indicator based contents from the next videos you'll be seeing on my channel, because people are really wanting to see those indicators that make a lot of sense, right? So yeah, over time I've been trying to get hold of one that I am sure would be reliable for a very long time. Of course, you can check my previous videos for some of them. As in fact, almost all of them are still very valid if you know how to use them. But then again, I like to update you guys with recent indicators that are making sense. But for this particular video, I'll be showing you guys how to do this without an indicator. So I've been on this trade since yesterday. You can see the area where I took the trade from. This has got to be a strong support area for this market to keep pushing in this direction. So how do you know it's a very strong support area? Okay, so I'll do it with this. It's making the chart look dirty, so I like to stick to just a couple of lines on my charts. I don't like too many lines on my chart. I'm not Spider-Man. So this entry was totally based on confluence. I've talked about this before. I'm still talking about it now because this is authentic. This works for me a lot, right? This works for me a lot. So this was based on confluence, and it was just the support and resistance, the trend line, the candlestick formation, and I'm going to show you guys how I came up with the entry. But first, like I usually say, you need to always be sure of the direction of the market. All right, you need to always see what the market is doing, where the market is likely going to, or where the market is heading to already. Okay, so clearly here we can see that the market was trending downwards on the 4 hours time frame. But if you go to the daily time frame, you will see a proper uptrend. Okay, so now we have it at the back of our minds that the market is pulling upwards, right? Because the higher time frames are more powerful than the lower time frames, right? So the higher the time frame, the more significant your analysis, or the more chances, the more odds you have, to win in the market. So here we can see series of higher lows, right? You can see, come with me, we can see the first low here, the higher low here, and the higher low here again. All right, so that is a clear indication that the market is pulling upwards, right? The market is moving upwards. Now I don't care how this market tends to do it, right? I don't know the pattern, the wave pattern the market is going to move until it gets to this previous high. All right, until it gets to this previous high here. But I sure know it's definitely heading to that direction. Okay, because look at this, it came all the way from here, it dropped to this point, created another high, dropped again to create a low, and then went on to create another high here, and then still dropped back into that level. All right, into that area where that trend line is. Okay, so the next touch is going to be another high. It has to create another high. It keeps going like that until a certain structure is broken and the direction is changed. Okay, that's to say, supposing it came to this level and it did not reverse at this point, and then it dropped back into this area, and then probably went below this area, then you would tell that this is a change of trend. The market is now pulling downwards. But as far as it's still in this direction, it's still following this trend. As far as it's still following this trend, then it will continue like that until, of course, it gets to a strong resistance level where it can't continue anymore. All right, so sorry about that. So this is what I expect the market to keep doing until it changes direction. All right, so we have this at the back of our mind that price is now pulling upwards. Price is now going to the upside. So that is an uptrend identified right there. We just identified an uptrend on the daily time frame. Now remember that the time frame here is more powerful than every other time frame, lower than the daily. Okay, so whatever is happening on the 4 hours time frame, well, I wouldn't say it's not important, but you always have to have it in mind that the higher time frame is better off than the lower time frames. Okay, so now we have the uptrend on the daily time frame. You now have to spot out the areas of support and resistance. How do you do that? You simply look out for areas where you see multiple touches. Yeah, like here on the 4 hours time frame, you can see that we had several touches on this level. Okay, I think I should just use this and highlight that zone. So we can see that we had multiple touches on that level. We can count with me. We had 1, 2, 3, 4, 5. Okay, we had 5. We had, let me keep dragging it. We had 5. We had 6 points, and I usually tell my students that 5 to 6 points are clear enough for you to see that that place is a strong support or resistance area. So yeah, we have another touch around that level, right? We have even up to like 6, 7, 8, 9 touches on that level. Okay, price broke that level a bit here, but still reversed around that level. So that is clear indication that that place is a strong support level. Okay, so when price is in an uptrend, when price is moving in an uptrend, and the market is in your support level, that is when, as a professional trader, that is when you intend to execute, but not just yet. Okay, you intend to take your trade, your buy, you intend to long the market, to buy when price is in your support area, when the overall trend is to the upside. Okay, so now we have the market moving in an uptrend, and we have price come to our support area. Okay, so now let's check here. We can see clearly a trend here. All right, this is a clear trend here. This is a clear trend here. Excuse me, I'm going to use the trend line to spot this area where there is another clear trend. Okay, now this clear trend here just still indicated that that place was solid. Okay, that place, you see here, price kept doing the movement. All right, it keeps moving, it keeps forming the wave patterns to the downside. All right, and then it came into support level here. All right, it came into the support level. All right, so having known that there is a trend here, and the market tends to continue in that pattern until it breaks out on either of the sides, either the upside or the downside, we know that around this support level, price is going to, around this support level, yeah, price came into this support. All right, we know that around that support level, price is going to want to go back to the other side of the trend line, which is what just happened here. All right, so having that in mind, okay, you now have solid reasons, many reasons why you want to be buying this market. You now have many reasons why you want to be buying this market. Okay, so what do you look out for again? Now we go to let's go back to the higher time frame and observe here that we had the doji candlestick. What does the doji candlestick do?
It signals indecision, but this particular one signals a reversal. This is a reversal doji.
Okay, so price was dropping on the 4 hours time frame down into this level, and then printed a doji candlestick here on the daily time frame. This is a very powerful one, guys. This setup is very, very clear. It's a clear buy setup. Now we have the horizontal line, which marks our support level. We have the trend line, which also marks the support level. We also have another trend line here. These are three strong points, right? These are three strong reasons. Okay, we have two trend lines, and this horizontal line come together to identify this level as a strong support level. So in my style of trading, I don't joke with this place. I can't joke with a place like this. All right, price is definitely going to react on this place, and it's going to react very strong. The reaction is going to be very tough. Okay, so you can see after that happened, after price came to that level and all of those conditions that I was listing out had been met, okay, you can see how strong the buyers had pushed the market to the upside. You can see how buyers have dominated the market. All right, buyers have been dominating ever since yesterday, and we've been on this trade since yesterday, guys. Look at that. All right, so like I was saying, I'm expecting price to come back. Now this trend line here is supposed to pull price back downwards, right? Initially I had my my take profit level around here. All right, but the pressure from the buyers is really, is really a lot. So I had to just take out the market keep pushing upwards. I had to take out the TP, because after it breaks this trend line, if it eventually retests this trend line and starts showing bullish movement, let me show you what I mean. Let's say on that level, something like this, on this current level right now, if something like this happens, it breaks, it reverses, right, it comes back into that level and then prints more bullish candlesticks around that level. Okay, so this will be clear indication that price is trying to come back to this previous high here, okay. So whenever it gets to that level, whatever is going to happen at that level, that is their business. It's none of my business, because I'll be out just before price gets to that level. I wouldn't wait until it gets to that level, until it touches that horizontal line I have there. I wouldn't wait. That's why you see that I have my take profit level just here. Okay, so whatever happens after price hits my take profit level here is none of my business. All right, also if price reverses at this point, excuse me, if price reverses at the current point it is at right now, and then drops into this level and then comes back to close below this trend line, if it closes below this trend line, that would be a bearish candlestick. I would run out of the market with my profits. I wouldn't wait, because this trend line still might be respected. Now the trend line, the horizontal line, these are areas. These lines only mark the areas for you. It doesn't tell you that at that exact point the price is going to react. All right, it's going to reverse, it's going to do any of such. It might happen at exactly that point anyways, but then again, it might happen after it has crossed that point a bit. It might also happen before it even gets to that point. That's why it's called a zone. That's why it's called an area. Okay, so you don't want to wait to see whatever the market is going to do at those levels, right? You just want to know that, just want to have it at the back of your mind that when price gets to that level, things happen. Price react on those levels. All right, so if you have seen your profits, it should be out before it even gets to that point, right? It should be out. It should be out. So how, if you are trading a small account, how do you come up with a good entry point for your small account? You need to switch to a lower time frame. Let's say the 15 minutes, 30 minutes, or any of those time frames. All right, so you see on a 15 minutes time frame, see where our entry was at. This trade, I took this trade, I think that was on the 1 hour time frame or thereabout. Yeah, I think the 1 hour or the daily time frame, I can't remember. That was yesterday. So on the 15 minutes time frame, it would have been proper to take this trade after the closing of either of these candlesticks around this level. Either the green candlesticks, either of the green candlesticks around this level, either here. All right, it would have made more sense to trade very close to these areas. Okay, but that notwithstanding, with this entry, if you have if you enter with a reasonable lot size, depending on your account size, okay, you'd still be good. Okay, only that you wouldn't want your SL to be as distant as my own. All right, you would want to keep your SL at this level, or even, let me take this out. You might want to put your SL at this level, okay, or even closer, and you won't be hit out. You won't be taken out of the market. You'll still be in profit. Okay, so it's usually very important to switch to a lower time frame if you are trading a small account, to take your entries based on what you see the market do on the lower time frame. Of course, you have to analyze from the higher time frame and then switch down to the lower time frame to see that the market is respecting. Okay, all right, so that being said, this is how to trade any financial market using price action. This is what traders would call naked trading. That is because you don't get to use indicators to mark your entry points or your exit points. You don't depend on indicators at all. Rather, you use your eyes. What your eyes are seeing on the market is what you are depending on, and that would always give you a better judgment than the indicators. All right, subscribe to my channel if you haven't done that yet. I'm here to help you guys, give you winning styles, techniques, strategies on how to make money trading, and how to become a successful trader, how to become profitable in the long run. So do not fail to subscribe to this channel. Also, ensure to turn on your notification bell so that if I drop any content, you would get it firsthand. Okay, you would get it immediately. Ensure to subscribe. If you have been using my strategies, if you have been trading using my strategies and you've been benefiting, please do well to drop good reviews. This would encourage other people to also see that this thing is real. Anybody can make money from trading. All right, anybody can make money from trading. So you have to just do this for me, guys. Share this video to your friends, let them learn from this. Also share it. Don't enjoy this knowledge by yourself. Just share. All right, stay tuned. I'm going to bring you guys a brand new indicator that makes a lot of sense, guys. I have studied it and I understand how it works. I'm going to share with you guys on my next video, so please stay tuned. All right, see you guys on the next video.